Hi, Kyle. How are you?
Hi, Beth. I'm doing well. Thanks for having me on.
Thank you so much for taking time out of your busy day. I know there is a shortage of appraisers, so this is also even more wonderful that we get to have some of your time to talk about appraisals and how they work. For the average appraiser or the average person getting an appraisal, or some of the other reasons why people use appraisers and appraisals.
I'm happy to do it.
Thank you. Hey, just before we get started, if you could just help me a little bit and tell me what the educational process is in getting your appraiser's license. That's kind of a unique thing in and of itself.
Yeah, absolutely. So to be a certified residential appraiser, you need to have your bachelor's degree. There's a number of classes that you have to take. I think it's like over 200 hours or so of coursework in addition to your bachelor's degree. And then kind of the big one is your experience hours or apprenticeship, kind of however you want to call it or whatever you want
Mhm.
to call it. And it used to be a minimum of 2 years, but they've actually reduced that down to a minimum of 1 year. And you have to have 1,500 hours experience hours within that 1 year time frame.
1,500?
Yeah, so you can go, you can take longer than 1 year, but you have to complete it at minimum of a year. So
Okay,
it's
so all right, I hate to do this to you. So what is that if you have a 40-hour work week times 52, right? So 2,080 hours is your gross potential of how many hours you're gonna, and you have to put 1,500 into that.
Yep. It's quite the time commitment. So I've had some people ask me, are you able to do this as a part-time gig kind of thing? Like, oh, I thought about being an appraiser to do it part-time, and the amount of time required to actually become an appraiser isn't really doesn't really work with that. So you're kind of all in if you're gonna do it. But the barrier to entry being high, in my opinion, is kind of a good thing. So make sure that the appraisers out there are qualified in what they're doing,
Okay.
and have the knowledge and abilities to accurately value homes.
Yeah, that's a huge barrier. You also have to have somebody that you work as a mentee. You're a mentee.
Correct, and that is also a part of it. That's honestly probably the hardest part of becoming an appraiser. Outside of the 1,500 hours is you have to find someone that you're able to tag along with. So it is a mentorship kind of program. So that's why I kind of refer to it as the apprenticeship, because you're following around a more experienced appraiser uh, as they go about their day and see what their process is.
Yeah. Wow, that's a lot, especially in the thing, and I know we've spoken about this before when we first met. It's interesting that you need to that much work, and I mean, and I love pricing houses, so I think I'd really like your job. But the other side of it is to be an inspector in the state of Minnesota, you can pretty much put a tool belt on and a flashlight.
Yeah, it's a little bit different.
Yeah.
We the, it's hard to do. It would be hard to learn how to do this job without being in the field. So I think there's some movement nationally to have a program out there for people to get into the industry without going through that kind of apprenticeship program. But honestly, I don't really see how that's going to work very well. So time will tell what that process looks like. But that's at least for the state of Minnesota. That's not the case right now.
Right. Because I mean, even Jean does, she does helps me with pricing on houses, and she and I have pretty long conversations about why this house should be this price and not that house. And she's looking at pictures. I don't know how you can do that without walking a house.
Yeah, you and yeah, same. It's there's a certain process as you go through the home that you're able to pick up on most stuff, and without learning what to pick up on, doing it day after day after day. I just I don't really know how that'll translate to having competent appraisers, but
Yeah, I mean, you can do a certain amount like that.
there.
Your classes, it sounds like you could do that. But I agree with. In fact, I really wish that there was more of a mentorship program for real estate.
Yeah, absolutely. For agents, that would probably be very helpful to have them tag along and kind of learn the ropes, so to speak.
Because it can be painful.
Yeah, yeah,
I've had
absolutely.
a few painful moments where I think I would have done better with somebody else helping me out.
Absolutely.
So, so when you get a home appraisal, what are some of the keys that are important to your position in this process? Um, they say unbiased professional assessment of a property value. What does that really mean for you? Like, what does that
Yeah.
mean?
So our role usually is that I like to tell people that we're kind of the only person involved in this process that doesn't necessarily care if the deal goes through. So agents are always, invested in, making sure the deal goes through. Loan officers are always invested in making sure the deal goes through. Appraisers, on the other hand,
Realtors?
appraisers are paid whether the deal goes through or not. So we're there to, give an unbiased opinion of what we think the home is worth.
Okay. I think that's important.
Yeah, yeah, me too.
So then there's two types of appraisals. There's the lending and the non-lending appraisal. Can you help me out on that a bit?
Yeah, absolutely. So for real estate transactions, on the lending side of things, uh, lenders or banks will send us out to make sure that there's enough value in the home
Mhm.
for the loan that they're making. So, they want to make sure that they're not making a $500,000 loan on a home that is probably only worth 200,000, or I'm just making up numbers here, but
Right.
they want to make sure that there's enough it's kind of insurance isn't a good word for it, but it's an assurance for the bank that the loans that they're making are worthwhile.
Right.
They're good
But
loans.
there's an asset behind it that's valuable enough for that money.
Exactly. And on the non-lending side of things, so that's estate planning, divorces. So, if two parties are separating and they're trying to divide assets, usually their biggest asset is their home. So they bring us in to tell them, this is what we think the home is worth. And then, the two parties and the attorneys can kind of hash out the details on, how assets are split that way. Estate planning is more say grandma passes away and the kids have to figure out how much money is in the estate when they plan to sell it, that kind of thing. And then the other one, pre-listing is you're thinking about listing your home. You're not really sure what the home could be worth. So agents can do this, but the pre-listing side of appraisals is more, I like to think they'll give you more of an exact number than an agent doing a market analysis, but I'm a little biased, I guess.
Well, you measure it correctly. I mean, usually you're measuring it but correctly. And mine sometimes some of these multi-level split homes,
Oh,
I need to have somebody else measure that. That's some crazy measuring. The other thing that I noticed that I appreciate with appraisers is there's usually a rule of thumb of how far out you're going to go from the location of where you're going to do it. The other one is I have used you for deaths in the family because I think it's good to have that third party before we put it on the market. The other times that I've used appraisers to ask them to please come in was when the market's tanking.
yeah.
I mean, when it's going down, it's very hard for me to determine. I can determine to an extent, but we did use you a lot, I believe it was 2012, 2013. I was asking for more and more appraisers ahead of time because I wanted the deal to close.
Yeah, it's everybody is quick to think that they don't need appraisals done in a rapidly appreciating market, or but as soon as things just start to shift, people get a little bit more cautious with their money, so they start bringing us around a little more often. So, but yeah, it's we also help out, measuring homes, that kind of thing, and there are some kind of standard rules that we use when we're trying to find comparable properties. So, the kind of industry standards is homes within 1 mile of the subject, and then homes that have closed within the past 12 months. So, it kind of, when you're looking for comparables, it kind of boils down to most timely, most proximate, most similar. And then, we try to match up everything we can. So style of home, vintage of home, bedroom, bathroom count, condition, special features that we might pick up on as we go through the home. And yeah.
That's great. Those are all very important features. The one with 1 mile was interesting in 12 months, because for a while there, I believe it was 2012, again, I'm dating myself a little, 2012 and 2013, they were asking within the last 6 months. And it was really hard for me to go the mile. And then all you can do, if you can't find anything in 6 months, you can only expand. You can't. Okay.
Yeah. And the mile's a little squishy. If say you're working on a lakefront property or an acreage property or something like that, then that kind of rules out the window. But the timely aspect is a really important part of it. So, especially in let's say it's a declining market or something like that, the more timely, the comparable, the better, usually. So.
And right now we're starting to see, I'm not going to use the term declining market, but days on market are getting longer. And I'm watching price changes that are in $25,000, $30,000 increments. I'm not seeing, 5,000. They're clearly cutting quickly. I tend to do price per square foot to make sure that I'm within the range. I mean, that kind of helps me not make huge mistakes.
Yeah, and it definitely depends on price point as well. So, that kind of, at least in the Twin Cities market, that under 450-ish range, I feel has remained very competitive. And the lower you go, assuming the home is in decent shape, I'm still seeing multiple offers on homes, even with, higher interest rates. When you get up over that 500 mark, things, people's mortgage payments start getting a lot higher. So it's
higher interest rate.
Exactly. So that's shifted a little bit. But yeah, the Twin Cities on a whole, I think is still, I haven't seen a huge decline, and I think maybe things have leveled out a little bit, but it's not the crazy appreciation that we were seeing, the last couple of years.
Plus, that's just unsustainable. Period.
Yeah.
That's crazy unsustainable. So I'm actually kind of happy to see it come into a better range for everybody. Yeah, especially my first-time home buyers. I get kind of anxious for them when they might be able to make the monthly payment, but if it's been up 20% year over year, that's too fast.
Yeah.
Well, if they want to get out of it, they might owe money on it.
Yeah, it's not sustainable in the long run. So, if we get back to single digits, that's probably more of a healthy market. But
yeah, I'm just fine with that. I'm very good with it.
Yeah.
Some of the things you talked about that you look at that you're assessing is you had kind of 4 key features. If you could tell me a little bit about what those are, even starting with overall condition of the property, what does that basically mean when you say that overall condition?
Yeah. So all of the kind of notes that I'm taking of, let's say, condition or, the style, the size and all that, it's information that I can use when I'm finding comparable properties. So if I go through a home that's been completely remodeled top to bottom, they've got all new everything. I'm not going to use a home that has been pretty clearly hasn't had their carpet replaced in 20 years.
Formica countertops.
Formica countertops. Homes that have that are a bit more beat up. I'm not going to compare a brand new home, a recently remodeled home to a home like that. So the notes on on condition, that's kind of where that comes into play. I'm trying to match up apples to apples the best that I can. And honestly, that's kind of the same for every bullet point. So similar age, similar style. So, 1-story style homes. I try to match up comparables that are also 1-stories. 2-story to split entry isn't really apples to apples. And then yes, square footage, that's a big one too. So, some huge McMansion down in Lakeville versus a, condo or something like that aren't necessarily, those aren't comparables. So that's kind of what drives that. And location of the property, that's a big one too. Is it on a busy road? If the property's on a busy road, I'm probably going to try to find comparables that are also on a busy road. If it's across the street from a big park reserve, same situation. I'm trying to find comps that are also across the street from amenities like that.
What would you say are your number one? They hold their value the longest. What style of home? Let's just use 3 styles: a split, a 2-story, and your 1-level home, or rambler as we call it.
Yeah, I think ramblers are always in demand. I think it allows people, to age in place kind of situation. So that's a huge factor for, demographics as they get older. I think ramblers, you don't see as many of them in terms of, say, new construction, just because they're more, builders get less bang for their buck when they build 1-story style homes. So I think a rambler, it will probably hold its value probably a little bit better than any other property. But it like with any, I should preface this with any of my comments that, like, it's always market specific. So the market in Southwest Minneapolis to the market in Hastings aren't necessarily going to be the same markets, but generally speaking, 1-story style homes will be, I think will stay in demand for years to come.
I would tend to agree. Almost always it's going to be that 1-level home, and there's a lot of ramblers in Bloomington, teeny tiny ones to pretty palatial, good sized ones. I think to raise teenagers, I like split levels. Just keep a little distance between you and other family members. But every time I get my most demand is always for a 1-level home.
And that seems to be across the board.
The bigger the better as far as that first level. Walkouts then bring up its value even more. So, and they tend to hold. There's a lot of really well built ramblers. That Bloomington has very good, well built homes. I tend to run into very good builders here. So I've been very happy with that. I can say as I go across the river, I haven't found as good a builders. And as you get into split levels and the multi-levels, I've really not been super happy with the build as much.
Yeah.
Fair call. So the appraisal prospect, could you tell me a little bit about what that process is?
Yeah, absolutely. So before I even go out to a home, I always do a little bit of research. So I'll dig up what I can online and just kind of try to get a feel for the home. So the style, all that kind of stuff. So if there's not a recent MLS listing for it, or it hasn't closed or hasn't sold recently, and there's no photos, I'll usually have a conversation with the homeowner to kind of, get a feel for what the home's all about. Kind of if they've remodeled their kitchen or bathroom, if they've made any major significant changes to the home. And just so I kind of know what I'm walking into. And then once I get out to the property, my process involves me walking through the home, taking pictures, notes, and measurements of every room. So I usually start in the lowest level of the home and work my way up. And then once I'm done with my stuff inside, I'll head outside for measurements and photos. And then in addition, before I go out to a home, I try to find kind of a rough list of comparables. And then I'll narrow that down probably 3-4 times by the time everything is said and done. Once I actually, get the square footage for the home and actually take note in person of the condition of the home and, all the fun stuff that's going on with the home.
Do you look up permits at all? Do they play a role?
We make a lot of assumptions when we go through the home. Most cities have permit checks that you can check online fairly easily. So I'll pop in and check them. Very rarely do I come across something that it would have to feel like it was done poorly before.
Right. It has to be egregious, in other words.
Yeah, very rarely do I get does it raise any red flags or anything like that. So, and yeah, it's once I get a layout for the home, usually lender, at least on the lending side of things, they like when we measure all outside stuff too. So garages, the decks, the pools, porches, all that stuff. So, yeah, people are always surprised that the inspection part of the process is very short. So I can usually get in and out of a home depending on the size in 20 to 30 minutes. If it's a bigger, more complex home, it'll take me longer, but once you do it enough, you know exactly what you're looking for. It just doesn't take me too long to get through a house. So I hear from homeowners often that, the appraiser is only here for 10 minutes, or, he was only here for 20 minutes. And it just doesn't take that long once you know kind of what you're doing and what you're looking for. And then once back in the office, we'll determine value. So there's a couple different approaches to value. Sales comparison is kind of the tried and true method. It's the most common that we use. And the kind of short version of that is that we're basing our opinion of value on similar homes in the area. We're using the industry parameters that we usually have. So like I had mentioned, within a mile, and homes that have closed within the past 12 months. And then we're adjusting for differences. The other approach, the income approach, that's for 2 to 4 unit rentals. That doesn't really apply to single family homes that often, just because, they're usually not used as income producing properties. And then the last approach is the cost approach. And that is, that's usually for new construction. For older homes, you can determine depreciation for a 100-year-old home, but is it going to be more accurate than determining value based on the home down the street? I'm in the camp that it's not as accurate. So sales comparison is what 99% of appraisers use on 99% of their single family home appraisals.
Okay. And like you said, you're trying to get something really close by, so you're probably within the same builder.
You try to, and you try to that kind of trying to match up apples to apples best you can. So that kind of falls under. There's a couple categories that we look at. So there's a quality part. There's a condition part. So I'm trying to match up homes that have similar, millwork, high-end, high-end finishes, that kind of thing. So, like you gave the example of, I'm not going to compare a home that has marble countertops to a home that has Formica countertops, kind of thing. So just trying to find that out, the apples to apples comparison.
Yeah. The harvest yellow.
Yeah, exactly. Exactly.
If you were going to start with helping buyers just to get home appraisal tips, because I think a lot of times buyers they're anxious. we've left the market of being able to work with first-time home buyers. And that I hope that we can go back into that market because that's a huge part of our economy.
Yep.
That's where we build wealth. That's where our economy is. I love working with first-time home buyers and people getting really excited about this part of their life. So what are some tips that we could kind of help avoid the buyer from freaking out, since if we are going to a calmer market or let's say a balanced market?
Sure. I think being careful on how much you're offering a home on the home is kind of the number one thing. So if you're a first-time home buyer and it's so tempting that there's 5 offers on a home, you want to be the best one because you want that home.
Right.
But you gotta plan accordingly and stay within your financial means, and less so now that the interest rates are higher that you're getting a lot of bidding wars. But people get FOMO when they're bidding on a house, and you've lost out on 10 other properties, and it's you really want this one, so you're like, oh, I'll offer as much as I can. But if the comparables don't support that number, then you might get into a bit of you might get into a situation where if you have to come up with more money because the appraisal falls short, and you don't have those means to do it, then you're going to lose the home anyways. So it's making a smart offer, listening to your realtor. I mean, they're the professionals. Trust what they're telling you. They're the ones that should be guiding you in the process. So yeah.
Well, thanks for the plug.
Yeah.
And if they do come in with we've actually, Dan and I, we haven't really appealed that many appraisals. It has to be fairly, it's if they only miss something, have we like, oh, dude, you completely missed, I don't know, brand new deck.
A bathroom or fireplace or
something crazy good to the house. Yeah. That we've actually said, no, I think there might be an error here. So what's the appeal process if needed? And also before we get into that, are you hired regularly by the same banks, or is that also something that has to be moved around a bit?
So after the housing market collapse, there was kind of a barrier set up between appraisers and lenders because they're a little too cozy, that led to a lot of issues. So usually how it works for lenders is that a lender will use what's called an appraisal management company, or an AMC. So we as individual appraisers will sign up with the AMC, and the bank will say, we need an appraisal on this house. And then it goes to the AMC, and then the AMC sends it out to they could either send it out in a rotation process. So sending it out to, kind of a round robin to the appraisals that they have on their panel, or they send it out for a bid, and then they goes, to the highest or sorry, it'll go to the lowest usually, or the quickest. And then, so that's kind of how that process works. So yeah, we do have repeat clients a lot.
Do you work a certain area?
Yeah. Personally, I try to stay within about 45 minutes of the Twin Cities. I'll go out further than that. But I usually have to, I charge for travel time. So if I go over, 45 minutes to an hour, at least on the lending side of things, they don't like to pay the extra to have me go out there. So I try to stay within the metro as much as possible.
Sure. So the appeal of what do you need to appeal appraisal if needed?
Yes. Sorry. So the process for
I ask you tons of questions.
Yeah. So the process for appealing, you usually, to have a successful appeal in the appraisal, you have to have something that is tangibly wrong with the appraisal. So they missed a bathroom, they missed a bedroom, they missed a fireplace, the comps that they pick were horrible or something like that. you can't just appeal because you don't like the number. That usually isn't, that's not how the process works. Usually a successful appeal is providing the appraiser comparables that you believe are better than the ones that they chose. Appraisers will have a chance to respond to that and say, this is why I didn't choose that, or this is why I did, this is why I left that one out. I've had appeals where they'll send me something that is like a lakefront property to a home that isn't, and it's like, well, there's a reason I didn't pick that, and it's because it's a lakefront property, and that's why I didn't choose that comp. It would have helped your numbers a little bit more, but like that's not apples to apples. More recent sales, that kind of thing are usually helpful for appraisers. But if they're good at their job, they probably already looked at the stuff that you're sending them, to be quite frank. And but just like anything, there's people who are bad at their job, and they might have missed something.
I mean, after 1,500 hours, I would think you'd like get this down. I mean, that's just a really long time to finally be on your own and working. One of the things that we do, and we do it really regularly, is if I priced a house that I was playing with, or I did a lot of work on it, and I really feel like, okay, this is where I'm at, I try to share that with an appraiser. Now they're talking about keeping this arm's length distance from the banks, from the loan officers, from everybody. But what I'm finding is that if I can just share it, it's not for me to say I'm right, you're wrong. My whole point in doing it is, this is what I was thinking. These are all the improvements they made on it. These were the comparisons that I was looking at. This is where I thought that it was a fair price. And I will usually leave it on the kitchen table. I'll do, if I'm fortunate, I will try and meet personally with the inspector, or I'm sorry, with the appraiser. How is this viewed in the industry?
Good question. So personally, I say the more information, the better. So every once in a while, they'll have a comparable that I might have missed for whatever reason. That's just, it's helpful to have. I don't think that, so the rule for keeping a distance is that we're not supposed to be influenced in any way. So we're not supposed to come under influence from loan officers. We're not supposed to come under influence from agents or homeowners to sway our opinion of value in one way or the other. So you leaving information out, in my opinion, is not influencing me. It's just providing information that, one, I likely already saw, but two, it's you're giving your reasoning for how you listed your home. And I think that is helpful. There's some appraisers who don't like it, but I'm in the camp of the more info, the better. Similar to politics, everybody has an opinion on things, and they're not always right, but it's
perspective.
I mean, it's just information, and that's kind of all I take it as.
Okay. Yeah, that's good to know. Just because as I go through this process, I'm also anxious because sometimes I'm priced. I go on the market and I might not, I mean, it might be the height of the spring market. And it's like, wow, that's what was happening in that snapshot or time period. Let's say, and in this market, let's face it, it's always been above. It's been above what my asking price was. But my brain was here, and this is what the market did. Like that, I'm usually seeing the appraisers like, yeah, I saw the market here. That's crazy. How many offers you got at this? Does that make sense?
Okay. Yeah. And it's unfortunately on our side of on our side of things is that, we look in the past for comparables as an indicator. Agents are generally trying to look ahead to see where the market is heading. So, we're just because of picking comparables, we have to pick closed sales. So, just by the nature of how that works, we got to look in the past, and that's kind of where the timeliness aspect comes into. So, the more timely the sale, the better, and likely the better indicator of where the market is headed.
Right. And I do try to always do it on what's closed. I'm not trying to project where it's going. I let the market do that. And if we've marketed correctly, like I have found that open houses and social media and all the other stuff, video, all that really does push the price up.
Yeah.
Just because everybody knows about it. That's all. You just opened your market to all the potential buyers to get it. So by the time I know at the speed of this market, I know within 4 days. Boom.
Yeah. No, it's it's
gonna happen or it's not.
Yeah, exactly.
At this price point. So we shouldn't let buyers stress out about it is basically what we were saying in this one, because they tend to stress out, especially if they've done exactly what you said is they went beyond their means.
Yeah. It's just kind of trust the process, and it's we're usually the last step in the home buying process, so we're usually the last ones to go out. So it's try not to stress out too much about it.
Now this isn't on the deck, but an appraisal gap is exactly what?
So appraisal gap would be if you offered $500,000 on a house and my value came in at $450,000, there's a gap of 50,000, which is, it's a big gap. That would be a big whoopsies. For I wouldn't say it's a big whoopsies, but it's a big that's a big gap. It doesn't happen as much now, but it definitely happened back when interest rates were dirt cheap. So
at 3,
exactly. So so there'd be an appraisal gap of $50,000. So you're left with a couple options. You can option number one, which is usually the best, is people come to the negotiating table and figure out, they figure out where they want to match up and, kind of split the difference kind of situation.
Right.
Because the bank is only going to lend you, say if I came in at 450, the bank is only going to lend you $450,000. So that's it. So anything over that 50K that you guys, or that extra 50K that you guys agreed to pay, you're either going to have to pay that yourselves, kind of tool your down payment and, loan percentage to kind of figure that out. But that, you'll likely have to go to the renegotiating table, or you guys, people will have to walk away from it if that happens.
Yeah. It's just really, it's a whole nother negotiation cycle.
Yeah.
Well, there is to it. And the people with cash was king. That's it. Cash just ruled everything, because the seller then did never have to worry about that next piece in the valuation of their home.
Yeah, exactly. And that kind of goes into, sellers, when they see the highest number, that's not necessarily going to be the best offer.
That's right.
And again, you should trust your agent on this again. But, if you see the offer comes in at 500 and, they've only got 3% down, well, there's not a lot of wiggle room there to work with. And, they might not have deep pockets to be able to come up with an appraisal gap if there is one. So, planning ahead is usually the, helpful to avoid situations like that.
So if you're getting it from the home appraisal tips for the sellers, what would that be that you'd like to kind of get ready for?
Yeah. So, like I mentioned, the more info, the better. So if you have documents that, or just I don't need to see the packet that you've had since you've moved in 30 years ago, but just, a punch list of, we replaced the roof in 2019. We redid the kitchen in 2020. We redid the windows in 2015, whatever. Just a punch list for updates is helpful. Then I don't have to, I do a pretty good job of being able to guess the condition of things, or, judge the condition of things. But if you got a punch list that tells me that the windows were replaced 3 years ago, well, then they're in really good shape. So that's really helpful. Make sure that all of your projects are done. Don't have the appraiser come out and you don't have any flooring down in your kitchen, because if that happens, I have to write the appraisal basically subject to the floors being done, and then I'll have to come back out there, and then I have to charge to come back out there and do the reinspection, and just try not to have any ongoing projects going on.
A case of that was, in fact, we just recently had an appraisal that the water wasn't running.
Yeah.
Turned the water off. You got to have everything in working condition. And I'm sure the appraiser might have just gone to the bathroom or something and been like, there's no water.
we usually, if the home is vacant, we're supposed to test. We usually test utilities. For FHA loans, we always have to test all of the utilities. But yes, for conventional loans, it's we usually just turn the faucet on, and if it's not operating, we can't tell if the water is actually functioning. So,
Right.
So yeah, make sure all the utilities are on. Try to remove clutter from the rooms and walkways. So, I don't have to do like a dance to get her into a bedroom or that kind of thing. Or,
Interesting.
Yes, we look at a home as if it's vacant. So we're not looking at your stuff, but being able to access all of the rooms is important. So, if it's boxes floor to ceiling, it's going to be hard for me to get into the room.
Okay.
So yeah, just, clearing out clutter to make way that we can move through the home freely. If you have, if your agent has given you a list of comparables, leave that out on the table for us too. And yeah.
Okay. That really helps. In fact, that helps me now just to make sure clutter is out of the way. Although when people are moving, yeah,
it's part of the deal. It's part of the deal. Oh, and also make sure your pets are secure too, because I've shown up to homes to do the inspection and no one is home, but there's a dog barking at me in the window, and it's like,
no way.
Yeah, I can't go into a house with a loose dog. So either take the dog, and I'm a dog person, but take the dog out during the inspection, or lock them up while I'm there or something. But yeah, I can't have loose pets.
Yeah. Well, and I don't trust. It's their home, right? What
Right.
are they going to do? They're going to protect that house. So you're an enemy number one as far as they're concerned. If it's a guard dog of any sort.
Exactly.
Okay, so I think we've done quite a bit of them. We've talked about the financing, comparables in the neighborhood. Listen to your agent. Thank you. I always like that. Have we missed anything? What happens when the appraiser comes back? We did all the negotiation of price. So how long does the appraisal process take?
Yeah, so usually lenders give us about a week to two, at least for lending appraisals. A week to 2 weeks usually is kind of the standard time frame. So when I call the schedule, I'm usually scheduling out for next week, and then I try to have stuff back to the lender within usually 4 to 5 business days. So yeah, a week to 2 weeks. Once it's off my desk, it's going to be working its way through the underwriting process. So I've had homeowners call and ask me where the appraisal is, a few weeks later, and I've already submitted it to the lender, and it's like, check with your loan officer. They'll be able to tell you where it is. They're almost always the better point of contact than we are. That's usually kind of the rule.
And then also, right, just from our point of view, we usually get done with the inspection process. As soon as the inspection is signed, meaning we're going to the next level, that's when we ask for, at least we tell our loan officer to ask for the appraisal. Is that correct in most cases?
Yeah, I think so. We're usually the last step, just because home inspections can bring up
another negotiation cycle.
Yeah, I mean it's a can of worms for home inspection. So who knows what they will come up with. So that's kind of the negotiation before if they find something that's an issue, that's a negotiation before we get to get too involved. So yeah, that's usually the case. I like to tell homeowners that we're usually the last step in the process. Just because we're all the other hard negotiations are done.
Mm-hmm. Yeah, and let's face it, we consider the appraisal and we treat it as another negotiation cycle. We want to make sure we make them know right ahead of time, so that, like you were saying about making sure that if there is an appraisal gap, if there are any of those other things, that is part of another negotiation with the seller or with the buyer, depending on how it plays out. Of course, you're trying to narrow that every step of the way, so that we're not trying to make it a negotiation, but it is part of the process, and especially in what we call a free market. Things change.
Yeah, absolutely.
And who basically pays for the home appraisal ultimately?
So in the end, the homeowner is going to be the one paying for it. You'll see it buyers will see it in their closing costs.
So it's the home buyer.
The buyers are the ones that pay for it, but we get paid from the lender. So it's a weird dynamic. So technically, the lender is our client. So homeowners will pay for it as part of their closing costs.
Okay.
And then in turn, the bank pays us. So that's people get very, they will call us after an appraisal and say, oh, I need a copy of or whatever. I'm actually only allowed to give the copy to the bank. So again, talk to the loan officer. They'll be the one to give you a copy of the appraisal.
Mm-hmm. That's a key point. That's important. I think everything from a home buyer or seller's point of view, are some key points that you brought up, is that there is an arm's length distance between you and the buyer seller, right? That's the whole point, is to keep you at a distance. You're also at a distance from the bank and the loan officer. And then also, as for just basic practices, is that as realtors, we can't influence you. We can just give you our data. And my data really is, I start with how many showings. I usually tell the appraiser how many showings I've had. I tell them how many people showed up to the open houses. I tell you how many offers, and I tell you the range of the offers, and I tell you the financing of the offers. That's how I know it's just data for you, but it's also my way of figuring out the funnel of price market.
It's all good info.
Okay. Well, thank you so much, Kyle Engdahl. It has been a pleasure talking to you. I learn things every time I talk to you, because it's a huge and very important part of the process of buying and selling real estate, is what you do. And it's great that you guys are as well educated as you are. It's actually a benefit for us. And I always take as many classes as I can with for real estate, to learn more about, okay, what should I look at next, and if that's pertinent to the price. So I do love the pricing part of of this job. And I'm very grateful for you coming on and giving us your pearls of wisdom.
I'm happy to do it. It's we're usually kind of the we're kind of in the shadows part of the home buying process. So I think that's not a good thing for our industry. So I'm happy to have the conversation with you guys. And I usually like when homeowners ask me questions too, just because most people don't deal with us outside of a few times in their life. So
and it's usually kind of stressful.
and it's usually kind of stressful. So. Absolutely. So I'm happy to do it. And yeah, I'm happy that you invited me on. It's been a good chat.
Yeah, thank you. So you're the president of Mill City Appraisers. So if you are needing an appraiser, they can reach out to you directly.
Yep, Mill City Appraisals. So we do single family homes, townhomes, condos, 2 to 4 unit rentals, acreage property, lakefront. We do tax appeal cases. We do divorce, estate planning, and kind of everything in between.
Oh, tax appeal. That's a new one.
Yeah. It's that one's been that has been a new avenue. People haven't been too happy with their county tax assessment going up.
Okay. Got it. And I've been a part of that also as a realtor, where they're calling me saying, what is this?
Yeah. It's some pretty hefty increases for people. So it's happy to help homeowners in that process as well.
Very good. Thank you. And so again, Mill City Appraisals, Kyle Engdahl, and his phone numbers are right there. Thank you.
Thank you so much.